Good morning, traders. Gates W. Adams here, and I am back with another episode of the Trader Bacon Show. Welcome, and so glad to be back with you. I hope those of you who are here stateside had a wonderful Thanksgiving weekend. For those of you that are not, I hope you had a wonderful weekend nonetheless. And wanted to get the day started off with some pretty exciting updates. Just a few weeks ago, we had the great privilege of announcing Apex Trader Funding's $50 million payout milestone. And I can't remember exactly how long ago that was, but I just had an opportunity to quick glance this morning, and they are up to $65 million. I don't think it's even been a month, but that's almost $30 million paid out to traders in the last 90 days, almost $10 million a month average, and continuing to grow exponentially, which is one of the reasons that we have so much excitement about doing this show. It's all about traders bringing home the bacon and getting paid. So anyway, I have a great show in store for you today. When it comes to trading, there really is just no substitute for experience. And from time to time, we get some traders on here who have the grace to be able to share some of their experience that they've learned through years and years of trading and building up their success. And Jesse, I'm going to bring on today of Hustle with Jesse W on YouTube, and we'll talk about a little bit about his page here in a minute. But has been a consistent and continually successful trader, not only trading futures, but other equities and options as well. And he's going to share some of his tips and strategies today on today's episode of the Trader Bacon Show.
Welcome to the Trader Bacon Show, where we showcase everyday traders that are getting funded, paid, and bringing home the bacon. Are you ready? Because the Trader Bacon Show starts right now.
Jesse, good morning.
Good morning. Good morning, everyone.
What is going
happy
on?
to be here.
Dude, I'm glad to have you on here. Thanks for taking some time and hanging out with us today.
Thank you. Thank you for the invite. Going to have some fun.
Of course. Man, well, now, first of all, since you've got a YouTube channel, and we are going to talk a little bit about that today, I think it's probably worth the quick reminder that this is for entertainment purposes only. This is not designed to be any sort of financial or trading advice. Make sure you know what you're doing before you do it. That said, there's a reason people watch Jesse do his trading live and sometimes upload it after the fact. And we'll talk a little bit more about that as we get in here. So first of all, Jesse, let's talk about how you got into the game, man. What brought you into trading?
You know, it's a funny story. I started trading. I was introduced to the stock market by my dad, actually, when I was probably around 17 years old. So a senior in high school. He was not an investor. He was not a trader, but he knew the stock market was a vehicle that would allow you to have a shot at making, money and maybe achieving some sort of financial freedom. And I don't know, I'll probably show my age here a little bit. Scott Trade, was it? Scott Trade. You guys remember that brokerage? Yep. So he opened up a custodial account for me there. And I remember my senior year with a buddy of mine, Tommy, we both bought Cisco stock. He held on to it longer than I did. We made a few bucks on Cisco. And I mean, after that, I really didn't do much with the stock market. When Facebook IPO'd, I bought some shares. Then I panic sold them like a noob.
Right.
And I kept like one share from, I don't know, $20-something or something like that.
Right.
And I sold that one share probably 2 years ago or so, whenever Facebook was up over $300. I sold that one share. I couldn't help but laugh.
There's a little bit of nostalgia that you can hold on to with some of these things, right?
I love it because you have these little stories along the way. I really didn't start getting actively into trading until many years later. I'm talking about many years later, when an acquaintance of mine that lives out in Texas, this guy, he trades penny stocks primarily, but it's not like your typical YouTuber that buys a stock at $2.50 and sells it at, I don't know, $2.75. And it's like, oh, no, this guy, it takes him days to scale into his positions. He started off just trying to make $50 a day. And when he reached that milestone, he moved on to the next goal and the next goal. And now he's at the point where it takes him days to scale into his positions. It's crazy.
Wow.
And he told me, I don't know if you remember DRYS, when DRYS went insane.
Yeah, I don't remember when that was.
So DRYS was at the time of penny stock a shipper. It's a shipping company. Well, it was a shipping company, and this stock went from like $2, $3 and change to about 115 bucks over
Oh
about 3 days.
my.
I think it was about 3 days. He told me, Jesse, buy DRYS. I bought DRYS at I think it was $2 or $3 and change, and
Right.
about 100 shares. I sold them when they were up at $1, $1 over. I made a
Right.
hundred bucks. I was like, look at me, bro. That
Right.
thing that thing shot up to $7. I was like, nah, this can't be it. I bought 10 or 15 shares.
Mhm.
I sold them all between 30 or 50 bucks, and I held on to about 5 shares all the way to $100. That's when I knew I had to get into trading.
So it's just those little moments that just I think that really spur on that bug. And once you get the taste for it, once you get those little moments of, oh wow, this is not what I expected. This is so much more. It's kind of hard to put down, isn't it?
Completely. It got to the point as because that's when I started to learn to trade. And I got to the point as I progressed throughout that journey, which was, I'm going to be frank, it was a horrible experience to start to learn to trade. The the emotional roller coaster that is trading when you're learning and even afterwards is insane. And along the way there, I start to realize, okay, there's something here, but I got to learn
Right.
because one thing for me has always been I've been self-employed. I don't even know now. I have to be almost 2 decades,
Right.
and one thing for me has always been learning to take calculated risks
Mhm.
and learning to manage my money and my downside on anything I do, because if I don't perform, I don't make money.
Right.
So that part of trading for me was fairly easy to relate to and understand and apply. But the technical aspect and then learning to control emotions was just another world. So
So a little bit of a difference, I guess, between taking some advice from a buddy and just kind of watching it happen versus learning how to read what's going on in the market. And the emotional aspect of it definitely takes place. And I know we're going to talk a little bit more about that as we get through today. Um, so what actually brought you into the world of active trading?
So DRYS, when I saw DRYS went from $3 to 115 bucks over 3 days, I was like, wait a second, there's something here. I started to see charts and candlesticks. I knew nothing about any of that. Right. I started trading, paper trading, because right out the gates, I realized I could easily lose a lot of money.
Mhm.
So a lot of my DRYS gains were evaporated when I started just randomly buying other shippers through that craze because I didn't understand that, but they were sympathy plays.
Sure.
A- And I didn't get it, right? So I started just buying these randos and holding on to them thinking they're also going to go to 20, 30, 40 bucks and I'm going to make bank this month. And I realized that. So I actually got a notepad. And it's funny because I tweeted a few days ago, or maybe a couple of weeks ago, I tweeted a picture of my notepad. I don't know where it is right now. If not, I'd bring it out and show it to you guys. Um, I would paper trade. I would grab a pen and a paper and I would just put trades on there looking at what the stock was doing using bats for my data because it was free and I
Mhm.
didn't want to pay for, actual data. So I would use that which had a slight delay and I would paper trade with that. And I started to notice, that hey, if you have X amount of shares and you get X amount of moves, you can scalp your way to making some money here.
Sure. So
That's
when we most of us talk about paper trading, we usually don't actually involve paper, which I just find amusing that, going back to the original format, it's kind of cool to see that happen. Now, again, we're not going to talk about age here because, well, I still got you covered. But so what is it like? What did it take for you to learn to let's stay away from the mental side of the game right now because we'll get deeper into that. But how did you learn what ultimately has become your trading strategy? Where did that come from?
So, like everybody else, I went on YouTube. I went on Google first,
Mhm.
and it was just an onslaught of information that
Sure.
slowly brought me into YouTube. And then on YouTube, I started to find a couple of traders here and there that would post their videos and, big channels.
Sure.
And I picked one without naming names. They like to do the micro pullbacks on 1 minute charts.
Mhm.
And I gravitated towards that and I was like, oh, this is great. I
Mhm.
started paper trading that on actual demo accounts, actually using Das Trader Pro. I would pay the $150 a month, I think it was back then,
Mhm.
and I would paper trade on it. And I was, oh man, this is great. I can do this. The moment I went into live trading with that, it was just catastrophic. It was just not, it doesn't work that way.
Right.
So then I found another guy. It was a much slower type of trading. Um, and I started to learn a little bit from him about patterns like bull flags and U shapes and ascending wedges, descending wedges, and whatnot. But I felt like there was always something missing there in the way that he taught, where he would like, oh yeah, you just buy the breakout or you short the breakdown or whatever. But I felt like I was like, why? Why are we entering where we're entering? There's got to be a trigger that tells us this is where we're supposed to enter, but he never explained that.
Mhm.
And then I finally found the third person I learned from, and he explained why you enter where you enter and all that good stuff, which it has to do with volume. And
Sure.
that's where my trading really went from I don't really know what I'm doing, but I know enough to keep digging to
Mhm.
where, oh, wait a second, I got to change all that scalping momentum stuff I learned into this, which is more traditional day trading.
Sure.
And then that's really what kind of catapulted my trading, and that's how I got there.
So we're talking about a lot of what could be visual concepts, and I know we talked about showing some of your charts and
Yeah,
what you look for when you're entering a trade. Why don't we pull that up and just kind of have a glance at what that looks like?
yeah, for sure. So right, so this is today's chart. You could see here, this is one of my PAs at Apex.
Mhm.
Um, Really decent day today. Nothing huge, but really decent. We can go over that in a minute. I'm trying to drag. I don't know why it's not showing up. I'm dragging a chart in, but it doesn't seem to show up.
Oh, I
That's
think you
weird.
have a window selected right now instead of the screen.
Oh, okay. Well, in that case, we're gonna just, huh?
No, go ahead.
No, in that case, we can go over today's trade.
Yeah.
Let me just put up the fills.
Okay.
Why is it not showing up? Give me a second here. Oh, because I did order lines. Okay, so here are my fills on today's trade. Today was a tiny, and I mean tiny little scalp. Today was a tiny little scalp right here. We see
Right.
it. Okay, so this is the most simplest way I can explain this. I like to I like to buy support
Hmm.
and I like to short resistance.
Okay.
That's it. I keep my trading extremely simple. It doesn't matter, and that's the other thing. It doesn't matter if I'm trading equities. I can be
Hmm.
trading equities, the shares themselves, or options, or I
Hmm.
could be trading futures, or I could be trading crypto. I haven't traded crypto actively in a while since the last bull run, but I do buy crypto for long-term stuff. But regardless, the point is that all of this can be applied to any trading vehicle, at least in my opinion, because I trade all of the ones that I just mentioned.
Okay.
Now, for me here this morning, we had the US Open, right? The US stock market open. And then right out the gates, these are the NQs. I told everybody because I was streaming this morning on my channel, and I told everybody, guys, if we break over 95, I think we're going to make a move into 20s. If we get over 20s, we should see 30s and 40s. And we squeeze. These are 3-minute candles. We squeeze straight out the gates, all the way up here to right in front of 40. I didn't get in any of that. Nothing. I did not touch it, just
Right.
because it wasn't. I didn't get into it. That's all. I had no rhyme or reason. Just before the open, I didn't buy. I didn't get long, but it did what I said I would expect it to do. Now, we look at this wick right here,
Hmm.
and I'm not one to trade off of a singular candle by any means, but this
Right.
wick right here is really bearish. Price action, because we selling pressure in front of 40 was insane. Got
Hmm.
all the way back over here to 70s. Okay. And then we kind of like tried to come back up here and break up over 16,000,
Hmm.
but we started to get hung up in front of 20. Once we broke under 16,000 here on the NQs, I was live on the YouTube stream and I said, guys, I'm gonna look to get short in front of 16,000 if we can't break back up over it. Because
Okay.
in my mind, I thought if we can't break back up over 16,000, I think we can get back down here to test the lows. And that would be a regular trade plan for me,
Okay.
right? That would be a regular trade plan for me. Why? Because I think we would retest down here at the lows. However, right now we've been stuck for the last couple of days in a very, let's call it, tight trading range on the
Right.
Qs, on the spies, on everything. When we're in that tight of a range, it's easy to get chopped up. And then when I was a new trader, my kryptonite was FOMO. Now,
Mhm.
as an experienced and profitable trader, my kryptonite is getting chopped up. Why? Because we'll go off on these. The chop generally comes after we go off on these really nice trends. Whether
Right.
they're up or down is irrelevant. The
Mhm.
market isn't going to move straight up or straight down. Meaning, once that move is over, we're going to consolidate. And when we
Right.
consolidate, if we were doing well on that trend prior, we come into that thinking we're Superman. No,
Right.
we can get it done. It doesn't matter. So you come in with that mentality. I'm having one of the best months I've had, I think, ever. Right now, this month, I'm up. I just need $500 more, and I'm up $20,000 on the month
Nice.
in my funded accounts. So that's crazy. That's really good. I for me, that's amazing.
Right.
So I could easily come in, and it's happened in the past to me. I easily come into this consolidation phase with that mentality of I can do no wrong. And then you
Right.
start to get chopped up. You lose $200 here, you lose $300 there. You start to make these losses. And if you're good at managing risk, those losses are within your risk tolerance.
Mhm.
However, since you're in that consolidation phase and that choppiness, you start to die by 1,000 paper cuts.
Right.
So when I recognize these things now, I have a rule set in place. Typically, I scale in and out of my trades, especially out of them. So what'll happen is when my first take profit hits, I usually take 10 to 20% of my position off. I pay
Okay.
myself for my first take. Then I hold on to my second take, which will be the bulk of the position. Okay. And then I always hold on to a little piece to see if we can get runners out of. Sometimes I'm able to add back into that small little piece because we're just extending so well.
Sure.
It'll allow me to add to that position. But when we're in chop zones, the first take profit, I take off the bulk
Mhm.
because we're in the chop zone. The
Right.
chances of me getting that continuation are probably slim to none.
Mhm.
So this morning, I got short here in front of 16,000. We got down here to this previous little bounce zone, and I just took a little piece off.
Mhm.
And then we extended a little bit further underneath this candle. Normally, I'd add on that. I'd
Mhm.
add on that to look for the push lower.
Right.
This time that didn't happen. So I took the bulk off right here. You can see I freaking bottom ticked it.
Right.
Then we bounced back up into this level and I stopped out of it. That was
Yep.
just a one runner. It was one contract. I was like, okay, if this one runner wants to get down here, I'm going to be greedy with it. And I'll watch and see if we can break underneath it. I might add back to it at that point, but I'm going to add really small on
Mhm.
it. Okay. But we didn't get any of that. So I stopped out of it. And that was it. I was done. It was
And
a
it looks
small
like
day.
yeah, and it looks like you stopped out at that last portion of the position at break even. So you
Yeah.
had
I
a
stopped.
couple of nice hits on the first 2 positions?
Yeah,
Yeah.
exactly. That last stop out right there, I actually made like $60 on it. So it's nothing. It's just a little trade. You know, I'd
Right.
add a little bit of icing to the cake that on it, but it it's one of those where you want to make sure that, especially in this condition we're in right now, that you're stopping out break even once you get that first move for me, anyways.
Sure.
Now, if we were in a trending market, I'm not going to stop out there. I'm going to stop out over 16,000 where my stop zone is, and I'm not taking any profit here.
Okay.
I'm probably going to add. I'm probably not going to take profit here either. I'm probably going to just add on the breakdown underneath this candle, and I'm going to look for this move down here, and then between here and this bottom, I'm going to start taking profit off, and as we
Gotcha.
extend lower, I'm going to take more profit.
So Steve wants to know how many contracts you had on this one to enter the position.
Just 3 contracts. That's
Just
all I
3
had on
contracts.
this one.
So
Typically,
each exit is just that one contract?
each exit is just that one. See, one here at 92,
Mhm.
one here at 86, and then one here at 95. Typically, I'll trade 4 to 5, but I, I don't really go over 5.
Gotcha.
Not
Gotcha.
currently.
So in a typical move, you don't know. Look, 16,000 is a special spot. We all know the triple zeros.
Yeah.
There's just a lot of dynamic that comes along with that. But in a typical move, you're in the middle of the chart. You're 20s, 30s, 40s, couple hundred or whatever, and you see a move like this. How do you typically factor your risk reward ratio going into a trade?
I love that question. I love that
One of my
question because,
favorites.
huh?
It's one of my favorites.
I love that question. I'll tell you why I love it. And I know that people will say, "Oh, but Jesse, there's so many ways to trade." Yes, there are. But there's a reason why only 90 to 95% of people fail at trading. You can't come out here and say you can trade many ways. Yes, that's true, but you can only be successful trading so many ways.
Right.
And a lot of times you'll see, and I went over a bit of a rant on this. I think it was Friday in my live stream. You'll hear people say things, which in part is true. It does happen, in my opinion, anyways, is that, oh, the market makers are fishing out stops. Yes, yes, that can happen. But the reality is, more often than not, your stop was just in the wrong zone. It's just in the wrong zone, flat out. And why? Because sometimes people use what I'll say, and maybe some people won't like it, trivial stop losses. Meaning
Mhm.
you get in, right? Let's use this example right here. On you guys see my chart. I went over this setup on the
Mhm.
live stream this morning. You can go check out my live stream, and you'll, if you watch the whole thing, you're going to see when I talked about this. Okay, you can come in here and say I'm going to get long here at in front of 20, right in here, looking for this pullback for a bounce to test the highs, and then you get under 20, you get stopped out. This thing goes to 16,000, and you're like, oh my god, look, it's right back at the highs. The market makers stopped me out. How I manage my risk is that I keep roughly the same dollar amount risk per every single trade.
Okay.
So the only thing that changes is my size on the position. That's
Mhm.
the only thing that changes. Why? Because the stop zone here is under 16,000.
Right.
16,000 is a major psychological level. It is a major level on the NQs. It's proven this morning that it was a little bit of resistance. Okay, we broke up and over it and we extended off of that level. So you
Mhm.
could get long if you want at 20, but your real stop is going to be 16,000. So now, in my opinion, one has two choices to be made here, which is what I was going over in today's stream, was getting long on a 16,000 test. Now, if I wait for the 16,000 test, okay, I can take on more size than
Mhm.
if I just got long at 20. Why?
Sure.
Because if I get long at 20, my stop is 20 points down, at
Right.
least 20 points down. But if I get long here, which is what I said in the stream today at at 16,005, at 16,007, my stop is going to be 5, 6, 7, 8
5
points down.
points.
But if I lose from getting long up here, or I lose getting down here, getting long down here, I'm going to lose the same amount of money because I'm going to
Right.
adjust my position size for that risk. So that's how I manage
Got
risk on my trades. The chart
Okay.
tells me where my stop is, and then I tell myself my position size to compensate
Right.
for where the chart is telling me my stop loss is. So it's not
Okay.
1% of my account. It's not 1% of whatever. It's not going to be, oh, I'm going to have 5 points. What do you mean 5 points? It can't. If you get 5 points on any given trade as your stop loss, if you didn't enter in the correct area, I guess you're going to
Mhm.
get stopped out over and over and over again. And you're going to blame
Right.
market makers.
Right. Well, it's easy to point fingers when ultimately you don't get what you want, and of course, it's really easy to take credit when you do.
Yeah.
So, real quick, I just want to remind everybody we are giving away 3 Apex Trader Funding evaluations. We've got the form right there in the chat. So make sure that you get your name signed up on there. We'll be giving those away. I'm going to say, hopefully, at the end of the break, we have a little bit of a producing difference than usual. So if it doesn't get handled, we will announce the winners. You'll know before next week's show, but we'll actually announce them at next week's show. And Jess got your message. Fantastic. So, Jesse, let's talk a little bit about what life has looked like for you since you've basically made more of a transition to making trading a bigger part of your life, your financial life, and otherwise. What do things look like for you these days?
Man, I love it. It's super freeing, right? Like, for example, I spent the entire summer down in the Florida Keys. We have a house down there I bought back in 2019, and it's on the water. I got my boat right there on the boat lift,
Mm-hmm.
and I literally would post up screenshots and stuff and little shorts. I'd be like, all right, guys, I'm done trading this morning, and I would just jump on the boat and go fishing.
That's awesome.
So, right now this month, one of my businesses hasn't done very well sales wise.
Mm-hmm.
It's okay because I'm up $20,000 basically trading futures. You know what I mean? So it all started off with just I thought to myself, hey, making $500 extra a week is amazing, and it is. But now it's actually it's actually providing more money than it has in the past,
Mhm.
and at a perfect time, because the state of the economy right now is pretty wild.
Sure.
Things are super expensive. So I've noticed other parts of my business, people aren't spending the money there like they used to. And if
Mhm.
they don't spend the money there like they used to, that means we don't make the money that we used to.
Right.
So it's got to come from somewhere else. And thankfully, trading with Apex has been a major part of improving that for me and my family.
That's amazing. Now, so let me ask you an important question. Is it always, roses and butterflies and unicorns?
What's that? The
Is it
the
always
butterflies?
roses and butterflies and unicorns? I mean, does it always go well for you?
No, absolutely not. One loses money. Like right now, when was it? Last week. Last week I had a down day where I lost $1,000
Mhm.
on the day. And what I try to do typically is I try to get my best day, okay?
Mhm.
And then that's my max loss,
Right.
right? So if I start approaching my max loss, I say, okay, I'm done. I'm not gonna keep trading.
Mhm.
So I mean, we have losses. Hell, and one of the videos I shared last week where I go over my stats on this little stint I have. Let me
Mhm.
tell you something. It's embarrassing to me. I feel embarrassed saying it, but I think it's important to be said and important to show it, because a lot of people on YouTube and on Twitter and on Reddit, like, oh, 90% accuracy, 80% accuracy. That's what they claim.
Right.
And as far as I've always been trained, a professional trader's accuracy is 70 and above. An
Mhm.
intermediate is in the 60s and 50s and 60s.
Mhm.
And anything below that, you can be profitable, but it's hard. My
It's
accuracy on this,
hard.
huh?
Yeah, it's hard, and of course, it's going to depend on that risk reward ratio, which is why that's always one of those questions that I like to ask because that is a key factor that a lot of people forget to mention.
Well, I don't know if I can show it on here because of my screen selection. I don't think I can, but I did post it on YouTube. My accuracy on the stint up until Wednesday of last week or Tuesday of last week, it's gone up now. It
Mhm.
was 47%.
Right.
That's crazy to me. I don't even understand that. I mean, I know math, how it worked and how I've made the money I've made because my risk to reward, because I stop out when my stop zones get hit. I don't hold on to bags.
Right.
And then my winners eclipse my losers. That's how I was able to do 47%. When I saw that stat and I did the YouTube video, I think I was only up about 13 or
Mhm.
14,000 on the month, and my accuracy at the time was 47%. I know now my accuracy is higher since we've passed a few days and I haven't taken any else,
Mhm.
but yeah, that's how it is. You look at your stats, you know that sometimes you're going to lose money, and then psychologically at this point, I know that I can make it back. Why? Because I have the skill set to do so,
Sure.
and that helps.
Sure. And you and I, when we spoke before the show, I shared with you a story about one of the big meltdowns that I had because I started streaming my trading at the beginning of the year, and this was in March. If you guys are follow me on Facebook at GAC Trading Pro, or it's actually GAC Trader. Um, and I went to kind of make myself a little video for posterity, and I went ahead and put the disclaimer in it at the beginning because I thought maybe one day I would show this. Well, I went to hit record and I accidentally hit stream, and there I was, like, very emotional. You had a similar experience, didn't you?
Yeah. So I posted a video a few days back. It's called my what is
Can I
it?
share this?
My epic trading loss or something like that. I don't remember the name, but
Can I share the link?
yeah, I don't have the link here. Do you have it?
Oh, I've got it. I'm ready. I'm
Oh yeah,
prepared. There it is.
awesome. Thank you.
I was ready for that one.
Appreciate it. Yeah, awesome. So that story goes down in history for me because not only was it the single biggest red day I've ever had. I used to use this online journal, and
Mhm.
when I plugged that in, as well as plugged in the next day's action, you would see my equity curve, like overall at the time in my career, and that one day was like this, straight down. It was like one of those where you're looking under the table to see where the candlestick went. It just went straight down, and
Listen,
it was bad.
Jesse, I know there's more to this story, and I've got the link up there, and I just looked up at time, and we're getting very, very tight. So On that note, with the last 10 seconds here, first of all, we did not get a chance to pull the winners. We will announce the winners next week, but if you are a winner, you'll get notified in the next couple of days via email that you have won one of these. Go check out Jesse's video. If you go to this YouTube link I put on there, you will get to his page. Make sure to follow and subscribe. You can see all of the stuff that he's talking about. There's a ton of questions on here that we didn't get to, and I'm sorry. This was so engaging. Even I lost track of time, which is not like me. So anyway, Jesse, thank you so much for sharing some time with us today. This was so much fun. Really, really enjoyed it. I know that there was just some great nuggets in there. And if you guys want more of that, make sure to go check them out on YouTube. You guys know me. I'm Gates. I appreciate it. And we'll see you on the next Trader Bacon Show.
Peace out, guys.
Welcome to the Trader Bacon Show, where we showcase everyday traders that are getting funded, paid, and bringing home the bacon.